there is this concentrated short position in silver, and that's been used to manage the price. But you have to be absolutely insane or suicidal to want to short silver at these levels. We've broken over the 3250 level. There's really nothing technically between here and 50. 50 breaks. There is no technical area to stop it. It's a crowded trade. I mean, it is a concentrated short that at some point in time has got to be covered. Do they really believe they're going to be able to cover it at 25 or 20 or 15? No, they're going to be forced to cover. And it could be, you could wake up, we'll go through a period of time where you see silver move $1, $2 a day, and then you're going to see $5 and $10 moves. Then all of a sudden you're going to start seeing $50 and $100 moves. And I'm talking about silver now.
Silver prices have surged more than 35% this year and are poised to continue their upward trajectory, supported by growing global demand. One of the key drivers of silver's potential upside is the shift in Russia's precious metal strategy, which could significantly benefit silver. According to a recent report from the Jerusalem Post, Russia plans to expand its holdings in precious metals, including silver, as part of its draft federal budget. This marks a strategic move to diversify its reserves and could create additional demand for silver as a key asset in the country's wealth fund. Silver's price gains have been further bolstered by the rise in gold prices, which have increased nearly 30% this year. However, silver also benefits from its critical industrial applications, particularly in clean energy technologies, making it an increasingly sought-after commodity. As countries like Russia take notice of these dynamics, silver's upside potential becomes more pronounced. A significant factor contributing to silver's potential for continued growth is the concentrated short position in the market. Precious metals expert Bill Holter highlights that an imbalance between paper and physical silver, currently estimated at 406 paper ounces for every physical ounce, creates the conditions for a short squeeze. This was seen in 2011 when silver spiked to $49 amid a short covering rally. With an even greater imbalance today, the possibility of a similar scenario is high, particularly if momentum shifts in the market. Geopolitical factors, including Saudi Arabia's vast treasury holdings and increased silver and gold demand from China and India, add further pressure to silver's price. As momentum builds, the market could see sharp price moves, especially if short positions are forced to cover. Investors underexposed to precious metals for years, particularly those seeking to move into the physical market, could trigger a dramatic shift in the coming months. Silver prices may experience explosive growth as supply becomes increasingly constrained, making it a key asset to watch in the global market. Adding to silver's appeal, technological advancements and sustainable energy initiatives continue to drive industrial demand. Silver's unique properties, including high conductivity and reflectivity, are critical for solar panels, electric vehicles, and various electronics. The ongoing push for green technologies places silver at the forefront of the renewable energy sector, further tightening supply and creating opportunities for long-term investment gains. If these trends persist, analysts anticipate that silver could surpass its historical highs, showcasing its dual role as both an industrial metal and a financial asset. Now we present the clips of Bill Holter's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I forget who it was, and I think it was, it might have been Bank of America, it might have been JP Morgan, I forget who it was that was really short after the, I think it was JP Morgan because they absorbed Bear Stearns, and I think Lehman was also short, but Bear Stearns was the big silver short. So those had to be covered, and that was basically a short covering operation. You have that same thing today. I believe Bank of America is the big short, but this is way bigger than back then. I mean, to see it move to $50, I'd be shocked if that were to happen. We've got, from what I understand, there's 406 paper ounces now for every 1 real ounce that exists. There's gasoline for the short squeeze fire. You also have, isn't it interesting that Saudi Arabia did not, from what I understand, they did not attend the BRICS meeting. And I think the reason being they're sitting on, what, $600 or $800 billion worth of treasuries, and they don't want to see the same thing happen to their treasuries that happened to the Russian treasuries, the 300 plus billion that were sequestered, stolen, whatever you want to call it. That's $800 billion that could move into metal. I just posted an article yesterday or the day before showing the amount of the volume on the Shanghai exchange. The volume has just exploded in the last month or two. If you're not familiar with the thought process of the Chinese, I'll just say that there is no gold bull market like a Chinese gold bull market. They are speculators at heart. They will chase price. So there's another can of gasoline. India has been a huge importer. That's another can of gasoline. Then after that, in the West, we're going to have banking problems. We're starting to have rumblings again in the repo market. I mean, you're talking about literally trillions of dollars that are going to move into gold and silver. And that's like trying to put Niagara Falls through a garden hose. You can't do it. The price is going to explode, and it will be real raw buying. The real fun is going to be watching the shorts get squeezed because they're going to be forced to cover. When you use the term marginal buyer, it's a buyer on the margin, but Russia by no means is a marginal buyer. I mean, they could step up and easily put, $50, $100 million a month. And in the very first month, there'd be a failure to deliver. All available gold and silver for sale today would not be for sale tomorrow. That would all go into hiding. So, yeah, that's another huge buyer. And I just want to say that, there is this concentrated short position in silver, and that's been used to manage the price. But you have to be absolutely insane or suicidal to want to short silver at these levels. We've broken over the 3250 level. There's really nothing technically between here and 50. 50 breaks, and then there is no technical area to stop it. It's a crowded trade. I mean, it is a concentrated short that at some point in time has got to be covered. Do they really believe they're going to be able to cover it at 25 or 20 or 15? No, they're going to be forced to cover. We'll go through a period of time where you see silver move $1, $2 a day, and then you're going to see $5 and $10 moves. Then all of a sudden you're going to start seeing $50 and $100 moves. And I'm talking about silver now, I'm not talking about gold. And I think you're going to start seeing $200 day moves in gold. It's a function of shorts being forced to buy because they get a margin call. And I mean, you've got to be suicidal to want to short silver, which is the cheapest asset on the planet.
Holter's concerns about the sustainability of U.S. debt expansion are becoming more urgent as the government faces escalating interest payments. With interest rates remaining elevated, the U.S. is expected to pay between $1.5 trillion and $1.6 trillion in interest alone this fiscal year, while running a deficit that could surpass $2 trillion. Interest payments could reach $2 trillion in the next fiscal year if rates stay high. The federal government generates around $4.5 trillion in tax revenue annually, so nearly 40% of federal income would go just towards servicing the debt. This situation highlights the unsustainability of the current fiscal trajectory and raises concerns that the system could break, especially if foreign countries like the BRICS nations begin to move away from using the U.S. dollar for trade. As a result, many experts are advising individuals and institutions to protect their wealth by moving assets outside the traditional banking system. Gold and silver are seen as safe haven assets that retain intrinsic value and are immune to the risks of currency devaluation, government intervention, or bank failures. With increasing instability in traditional financial systems, more investors are turning to these tangible assets to safeguard their purchasing power. Adding to these concerns, recent geopolitical shifts and ongoing trade wars have put additional pressure on the global financial system. The diversification into precious metals is not only a hedge against inflation, but also a response to the potential decoupling from dollar-based trade. Countries prioritizing economic sovereignty and stability are bolstering their reserves with assets like gold and silver, strengthening their positions against economic volatility. This movement signals a growing trend toward securing wealth through assets that offer a buffer from systemic financial risks and political upheaval, reinforcing why such metals remain integral for long-term financial resilience.
I guess I'm going to start by saying not very far, especially if interest rates stay where they are or go higher. This fiscal year that just started we're only a month into the fiscal year for the federal government. They're going to pay probably 1.5 or 1.6 trillion in interest only. We're probably going to run another 2 trillion plus deficit this year. And if interest rates go higher, I mean, we'll be at 2 trillion easily the following year. If you're taking in 4.5 trillion in tax revenues and you're paying 2 trillion out in interest expense, that should answer your question right there. You're at a point where interest expense is 40% of revenue. That's not even, that's completely not sustainable. And I would suspect that you would see the BRICS stepping in and saying, that's it, we're out. We're not using dollars. Here's your dollars. And I think what you're going to see is a lot of those dollars are going to come back here to the United States and buy stuff up. Those dollars that are being sold by foreign central banks, foreign sovereign wealth funds, a lot of that's going to go into gold and silver because they still want to hold money, but they don't want money that's going to debase. So I would just say you're watching the unsustainability happen right before your eyes. Even if the government knows that you bought X amount of gold and X amount of silver, there's no way they're ever going to go door to door, because the very first day they did that, there would be 1,000 deaths. A lot of people who have bought gold or bought silver, they own guns. They have lead. So I don't think there will ever be a day where they go door to door. It'd be more likely that they pass a law saying, either with a huge tax on the back end, or they make it illegal and there's a fine and a jail time or whatever if you're caught with it. But just like in 1933, a lot of people held on to that metal, and it's still within families almost 100 years later. One thing not to do, and I've had probably a half a dozen or more people just in the last 6 months to a year ask me, okay, well, I want to buy $100,000 in metal, but I'm going to do it in 11 transactions so that every transaction's under $10,000. No, you don't want to do that. That on its own raises a red flag. It looks like you're trying to launder money. Just do it with a check, do it with a wire. I mean, if you think that the government doesn't see an $8,000 check versus a $10,000 check, they basically see everything. And if they see 11 transactions all under $10,000, they're going to look into you, and they'll see, they will see each transaction. Don't do that. There's no need to do that. And if you do that, it's you may be creating problems for yourself.
Silver prices are expected to continue upward into 2025, fueled by robust industrial demand, particularly from clean energy sectors. Analysts predict silver will outperform gold in the coming years, with prices potentially hitting new highs due to increased industrial usage and ongoing financial uncertainties. JP Morgan highlights silver's role in the renewable energy sector, particularly solar power, where its use in photovoltaic cells is growing. Citibank also anticipates significant price gains driven by a tightening supply caused by diminishing mining output. With inflation concerns persisting and central banks diversifying away from the US dollar, silver is expected to strengthen its position as a safe haven asset. Adding to this, silver's unique properties make it indispensable for various technological applications. Its high electrical and thermal conductivity contribute to its critical role in electronics and advanced machinery. As electric vehicles, EVs, become more mainstream, the need for silver in battery technology and automotive circuits will further propel its demand. Additionally, the global emphasis on 5G technology and advancements in telecommunications rely heavily on silver components for optimal performance. The medical field also recognizes silver's antimicrobial properties, increasing its application in health-related products, which contributes to steady industrial demand. Investors continue to view silver as a hedge against economic uncertainty, amplifying its appeal during times of geopolitical tension or market volatility. The combination of these factors suggests a strong outlook for silver's performance in the coming years. Please share your thoughts on this analysis in the comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.